Hello everyone, good evening. Warm welcome to Regulatory Bodies YouTube channel by Testbook. I welcome you all in the another session where we will be discussing the most important questions based on finance which can be asked in your upcoming examination like PFRDA Grade A examination as well as in upcoming SEBI, IFSCA, for that matter RBI Grade B exam as well. So this is a must watch session for everyone, those who are preparing for different regulatory bodies exams. So without any further delay, let's get started. And if you all are ready and you want me to start with the discussion, just give me yes sir so that we can begin the discussion. Do let me know in the comment section. My audio video is absolutely clear, I am audible, everything is fine, so that we can begin the discussion without any further delay. I hope you must have shared the link of this session with your friends. If you haven't shared it yet, then I would request you quickly copy the link of this particular session, share it with your friends, do hit the like button if you haven't liked the session yet before we begin the discussion, which are going to be really very important for you all. So guys, let's get started with the first question. But before that, if you want to download the PDF of this particular session, that will be available on my Telegram channel. You can download the PDF from there, and I will be discussing each and every question along with a detailed explanation for each question given. So I hope you have seen the finance syllabus. This is the finance syllabus for your PFRDA examination, which is around the corner. In the last session, we have discussed questions based on financial system. Today, we will be discussing questions based on financial market. Then we will be discussing questions on this particular basis, and then I will be repeating it again. So in this manner, the cycle is going to happen on regular basis, and I will be completing a number of questions before you sit for your final PFRDA examination. Let's get started, guys. Here we go with the first question of the evening, and I would request you do participate in each and every point which I'm going to discuss so that you can have a good idea what kind of questions can be asked in the examination and how you can answer them appropriately in the exam. First question. Consider the following regarding the primary market. We all know that what is primary market. So primary market is basically a new issue market. Companies, they can raise funds via public issue. Yes sir, they can issue the shares openly to the public, via right issue where they will be giving a certain right to a specific buyer who can purchase these issues, as well as by private placement. That is absolutely correct. IPO pricing can be fixed price or book building. So what is the difference in this particular point? That whenever the IPO is issued, the price of the IPO pricing can be fixed or it can be book building. So fixed price or book building, are they two same terms? And if they are same, what is the meaning of actually the term that is book building? Any idea, guys? Anyone? Those who are listening to me? Anyone, any idea on this particular point? What do you understand by the second statement? Anyone? No? Shall I give you the answer then? Okay, no worries. I'll give you the answer. Guys, please pay attention. When we talk about IPO pricing method, when a company raises the funds via initial public offering, it can price its shares using the first one, that is fixed price method. Price of the share is pre-decided and it is mentioned in the offer document, that is the prospectus, and investors know the exact price before applying. Subscription, allotment, transparency is witnessed in this particular case. For example, company issues share at 150 rupees per share, clearly mentioned in the prospectus. Second one is book building method, which is mentioned on the screen. Book building method is a price band. Remember that book building method or book building price is basically a price band which include the floor price as well as it include the ceiling price. Floor price as well as it include the ceiling price. So this floor price and ceiling price is fixed by the issuer. So investors, they bid within the band mentioning the quantity of shares and price they are willing to pay. So the final issue price, which is known as the cutoff price, is discovered based on the demand and supply. Based on the demand and supply. So IPO can be issued on both the methods or both the pricing methods. That is correct. SEBI mandates minimum 25% public shareholding for listed companies. Yes, except for these conditions were earlier not implemented on government owned companies, but now they have been implemented on government owned companies as well. Shelf prospectus is valid for 1 year under the Companies Act. That is correct. Qualified institutional placement is allowed only for domestic investors. No. Qualified institutional placement is allowed for foreign investors as well. So on that particular aspect, the answer to this particular statement is going to be what? Sir, answer is going to be A. Statement is correct. Rest all the options are incorrect. Moving on to the next point. Regarding the secondary market stock exchange, SEBI regulates the stock exchanges under Securities Contract Act 1956. That is absolutely correct. SEBI is responsible for managing or I would say regulating the stock exchanges. That is correct. Stock exchange is a platform where trading of second-hand or trading of pre-issued shares is done. Next is National Stock Exchange was India's first demutualized exchange. What will be the answer to this particular question? If the question is asked that NSE, that is National Stock Exchange, was India's first demutualized exchange, that is true. T+1 settlement cycle is now available to all listed securities. T+1 ka matlab if you are making a trade today, it will be settled down tomorrow. That is known as T+1 settlement. Circuit breakers are imposed only on individual securities. No sir, this is wrong. Circuit breakers are imposed on indices also. So that is wrong. Stock exchanges can act as a clearing corporation. Yes sir, they do act as a clearing corporation where they transfer the shares to the individual to whom the shares has been sold out or the shares have been issued. Next, in the money market, identify the correct instruments. In the money market, identify the correct instruments. So in case of money market, treasury bill is correct. Money market is a place where trading of short-term instruments is done. Short-term instruments basically means the instruments which are valid for up to 1 year. So treasury bills is correct. Commercial papers is correct. Certificate of deposit is correct. Then we have repurchasing agreements. When we talk about repurchasing agreements, in case of repurchasing agreements, if I say repo rate, that is short term, that is acceptable. Debentures is not correct because it is long term. So answer is going to be B option. Only fifth statement is incorrect. Rest all are correct. Guys, am I audible? You are not replying. Do reply in the comment section. What could be the correct answer is? Because easy questions, अगर आप इन्हें भी attempt नहीं कर पा रहे, that means there is some issue with your preparation. So please look into it. These are pretty easy questions and you should be in a position to attempt them. Next, regarding the treasury bills are the government securities which are issued by RBI on the behalf of Government of India. It is issued at discount and redeemed at par because coupon rate is 0. In case of treasury bills, that is correct. Minimum maturity is 14 days. That is also correct. Available in 14, 91, 182, 364 days. That is also correct. Only banks and financial institutes, they can invest in treasury bills. No sir. Everyone, you and me, can also invest as per the latest announcement which has been done by RBI, where RBI has talked about retail gilt accounts. Even RBI has allowed systematic investment plan with the help of these retail gilt accounts, where the public, they can automatically participate in the auction for these treasury bills and central government securities. So answer is going to be A option. 1, 2, 3, 4 is correct. Fifth statement is wrong. Next, which of the following statements are correct with respect to the commercial paper? Commercial paper is unsecured money market instrument. Yes, commercial paper is what? So commercial paper is basically a promissory instrument where one company promises or one entity promises to make the payment in the near future at the given date. But against this instrument, no collateral is given. That is the reason we call it as unsecured money market instrument. That is correct. Minimum maturity is 7 days. That is correct. Corporates, primary dealers, foreign institutes are eligible to issue commercial papers. That is correct. Then commercial paper issuance require RBI approval? No, sir. RBI approval is not required for issuing a commercial paper. Commercial papers are issued in denominations of 5 lakhs or in multiples of 5 lakhs. That is correct. So A option is going to be the correct answer. Got it? Is it clear? Moving on to the next one. Consider the following statement regarding bond market in India. Government securities are issued via auction which are managed by RBI. Yes, sir. Government securities are issued through auction and this auction is managed by RBI. That is absolutely correct. Corporate bonds, they are regulated by SEBI. Yes, sir. They are regulated by SEBI. No worries in that. Masala bonds are basically the INR denominated bonds which are issued out of country. For example, Indian company is issuing a debt instruments outside India, but it is denominated in INR, which will help the Indian company to avoid Forex, Forex risk. That is foreign exchange risk. Remember that. Green bonds were first issued by SEBI in 2022. Green bonds were first issued by SEBI in 2022. I would say green bonds are not issued by SEBI, rather they have been issued by Government of India and other financial institutes. SEBI has never issued the green bonds, so this is wrong. State development loans are state government bonds. That is correct. So 1, 2, 3, 5 are correct, but the fourth statement is incorrect. I hope it is clear. Next, regarding the Forex market in India. Forex market in India is regulated under Foreign Exchange Management Act 1999. That is absolutely correct. RBI regulates Forex transactions via FEDAI. I would say FEDAI is an industry body. It is not a regulator. I don't know how many of you are aware, but if we talk about this particular term FAEDI, it basically stands for Foreign Exchange Dealers Association of India, which was established back in 1958. It is basically a self-regulatory body of authorized dealers in foreign exchange, and commercial banks, foreign banks, financial institutes authorized by RBI to deal in Forex reserves or in Forex are the members of this particular organization. So this is not a regulator. RBI regulates Forex transaction via Foreign Exchange Management Act. So that would be correct. Authorized dealers category 1 handle all current and capital account transaction. Yes, sir. जो authorized dealer है, they are allowed to carry out all the types of transactions, whether it is capital or current. Then external commercial borrowings are part of capital account transactions. External commercial borrowing is a part of capital account transaction. Yes, why capital? Because it is a long-term transaction which is impacting the liability. That is correct. Foreign portfolio investment in Indian bonds are current account transactions. No, sir. No, they are also capital account transactions. So answer is going to be B option. So remember that all the transactions which involve investment, which involve change in liability, which involve change in asset, will be included in the category of capital account transaction, and rest all other transactions, that is trade basis transaction, remittance based transactions, flow of profit, flow of income, all will come under the category of current account transaction. Current account convertibility is allowed 100%, but capital account convertibility is not allowed freely 100%. Next, in the equity market, which are true? Bonus shares dilute EPS but do not change the net worth. So what is this EPS? Any idea? What is this EPS? Any idea? Anyone? So the point is bonus share dilute EPS. What it actually means? EPS stands for earnings per share. So what are bonus shares? So bonus shares are the additional shares which are issued free of cost to the existing shareholders or maybe to the employees of the company. For example, today we have 100 shares of the company. Now company has issued 50 more bonus shares, so the total count of shares has now increased to 150, and these bonus shares are issued without any capital raise. And if there is no capital raise, earlier the profit was 1 lakh divided by 100, earning per share was 1000 rupees. Earning per share was 1000 rupees. Now if you are earning same 1 lakh but the number of shareholders is 150, so earnings per share will fall down. So it's quite obvious, bonus share dilute EPS but do not change the net worth. Yes, it will not change the net worth because net worth remains the same as no capital is raised. Right issue must be offered to the existing shareholders. Yes sir, that is true. Buyback reduces outstanding equity and may increase EPS. बिल्कुल सही है. 50 शेयर बायबैक कर लिए तो आउटस्टैंडिंग शेयर भी कम हो गए, प्लस पर शेयर जो रिटर्न है, जो अर्निंग्स है, दैट विल आल्सो इंप्रूव. प्रेफरेंस शेयर्स आर पार्ट ऑफ इक्विटी कैपिटल, आर पार्ट ऑफ share capital, not equity capital. So they are the part of share capital under the classified or under the Companies Act. So that is wrong. Sweat equity shares can be issued to employees or directors at discount. Yes sir, they are generally issued to the employees and directors only. So keeping that in mind, A option 1, 2, 3, 5 are correct. Fourth option is incorrect. Next, recent development in the Indian bond market. RBI has introduced sovereign green bonds in the financial year 2022-23. That is absolutely correct. India India is included in JP Morgan Global Bond Index in 2023. That is correct. RBI retail direct scheme also allows the individuals to invest in government securities. That is correct. India issued its first international sovereign bond in 2022. No sir, India has not yet issued its international sovereign bond till date. Corporate bond repo market introduced by SEBI. So corporate bond repo market has been introduced by SEBI, or SEBI has allowed the corporate bond repo market in the country. That is allowed. So answer is going to be C option. Fourth statement is incorrect. Rest all are correct. Next, in the call money market, call money overnight market for borrowing and lending, that is true. Notice money is from 22 to 14 days, that is true. Participants could be banks, primary dealers, as well as NBFCs. I would say NBFCs are not allowed. NBFCs are not allowed in the call money market. So remember that call money market allow participation of which all entities. Then my answer would be, so call money market participants include scheduled commercial banks, insurance companies, even the mutual fund companies, all India financial institutes. Scheduled commercial bank can be the borrower, primary dealer can be the borrower, but it do not include NBFC. Call money rate is a key in RBI's LAF corridor. That is true. That is absolutely true. RBI जो अपने LAF को decide करता, that is very important role is played by the rate of interest of call money market. That is true. WMA to state are routed through call money market. WMA to state are routed through call money market. No sir, ways and means advances to the states are not routed through call money market. We have all different channel for this. So answer is going to be 1, 2, 4 are correct. 1, 2, 4 are correct. So this should be A option. This should be A option because NBFCs, they were not allowed earlier. But my question is, do NBFCs are allowed today? Do NBFCs are allowed to participate in call money market? What will be your answer? See, actually call money market is basically specifically for banks as well as the primary dealers. It do not allow mutual fund companies, insurance companies to be its part. In case of lending segment, lenders can include the other areas, but in case of borrowing, we can include only scheduled commercial bank and primary dealers. NBFCs are not allowed because call money market is meant for very short-term liquidity adjustments among banks and primary dealers. So that is a point which you need to remember. So answer is need to be A option. Remember that, that is correct. ठीक है जी, clear हो गया? चलो. Moving on to the next. Functions of financial market. Financial market provide liquidity to the economy. Yes, sir. It facilitate price discovery. Yes, sir. It facilitate price discovery. That is correct. It mobilize savings for investment. Correct. It facilitate risk sharing. Yes, if you are issuing your shares of the company, you are basically sharing the risk. It ensure fiscal deficit financing for the government. It ensures fiscal deficit financing for the government. Fiscal deficit financing is not done because in case of financial market, government raises or government tries to compensate its fiscal deficit by raising the funds. That is done through borrowing, and borrowing can be done through financial market or it can be done through the other channels as well. So that is not absolutely correct. So I'll go with 1, 2, 3, 4. I won't go with the fifth statement. Next. Derivative market or derivatives derive value from the underlying asset. That is true. Futures are standardized, forwards are customized. That is true. Option give right but not obligation. That is true. CDS is a derivative in credit market. What is this CDS? Any idea, guys? What is this CDS? CDS is derivative. CDS is derivative. What will be your answer to this question? So CDS basically stands for credit default swap. A credit default swap is exactly a credit. It is exactly a credit market derivative. So commodity derivatives are regulated by RBI. No, sir. They are not regulated by RBI. Everything is done by SEBI. Everything is done by SEBI. So that is going to be the correct answer. So answer is going to be 1, 2, 3, 4. Correct. Next. Mutual funds in India are regulated by SEBI. Yes, sir, that is absolutely true. Exchange trade funds trade like shares in secondary market. Absolutely correct. Debt mutual funds taxed like debt instruments after budget 2023. Exactly. Association of Mutual Funds in India registered all mutual fund distributors. So when we talk about AMFI, we need to understand what is this AMFI basically. Sir, AMFI, it stands for Association of Mutual Funds in India, and it is a non-profit industry body of mutual fund sector in the country. Membership, all SEBI registered asset management companies are the members of AMFI. So this is correct. Gold ETF are regulated by SEBI. No, sir. So answer is going to be A option. There is no role of RBI in the capital market. So that is wrong. Second last question of the evening. RBI allowed rupee settlement of international trade in 2022. So RBI has allowed the settlement of international trade in INR. That is true. INR is fully convertible on both current. No, sir. It is not fully convertible on current and capital, only at current. Currency, future and options are traded on exchanges like National Stock Exchange. According to liberalized remittance scheme, limit is $250,000 per year. True, special rupee Vostro accounts are used for Russia-India trade. They are used for foreign trade, but they were introduced for Russia-India trade. Uske basis pe I would go with A. Otherwise, I would have ignored the fifth option as well. Last question of the evening, guys. Please pay attention. Regarding the SEBI recent reforms in primary market, SEBI introduced application supported blocked account like UPI system for IPO retail investors. That is correct. SEBI mandated direct listing of Indian companies on GIFT IFSC exchanges. That is correct. SEBI reduced IPO listing timeline to T+3. That is correct. Anchor investors must hold for minimum 90 days. That is correct. SEBI prohibited the preferential allotment in listed companies. That is wrong. So answer is going to be A option. Remember that this anchor investor timeline has been revised has been revised recently, and as per the recent revision, it has been very clearly mentioned. It has been very clearly mentioned that 50% of the shares allotted to the anchor investors must remain locked in for 90 days from the allotment date, and the remaining 50% will become eligible for sale after 30 days. So this is how you need to remember. ठीक है जी? Clear हो गया point? So on that particular basis, A option is correct, fifth option is wrong, rest all the options are absolutely correct. So thank you so much for joining, guys. Don't forget to share the link of this session with your friends. Do hit the like button and do share your feedback and suggestions in the comment section so that I can help you to the fullest, so that you can prepare really very well with me for your finance section, at least for RBI Grade B and PFRDA Grade A examination. Thank you so much. Good luck. God bless you all. See you soon. Bye.